Hey everyone, me Kevin here. I've got some bad news. It's not great. We know that tomorrow is FOMC day. We know that. We already have expectations that we're going to get the 25 BP hike. We already know that. We already know that we expect Jerome Powell to potentially discuss another pause for September, which basically turns a 25 basis point hike into a 12.5 basis point hike every meeting. 25 basis point every other, right? The problem that we have now is what's happening with inflation break-evens. Because earnings are coming in a little strong, because oil is rising under the hope that some Chinese property stimulus will finally actually revive that dead economy. Sorry, Chinese. I love the Chinese. I think they're brilliant, but I think the people are actually very smart to save their money because I don't think their government will bail them out like the American government bailed them out. Or bailed our folks out. Anyway, so what's the problem? Inflation break-evens. So y'all know, you should know by now, I've been a big fan of tracking the inflation break-evens. 5-year break-even rate just ticked up. This is the first tick up that we've really had since about the end of January, beginning of February, when we had hot data lead inflation break-evens to assume that, things might actually start heating up again, which could create pressure on inflation. The same was true with manufacturing data that we got this morning, which may have also contributed to the stabilizing of the 5-year break-even, which really shot up over the last 2 days. That is Monday. This morning it was already rising and then really stabilized when we got more data this morning. So we shot up from where we had been. A low was like just above 2, stabilized a little bit there at about 2.2. We were trending down at about 2.1. Now we're sitting at 2.28. So we've ticked up a good 8 to 9 basis points. So what does this mean? Well, I've regularly commented that I believe Jerome Powell is going to use the inflation break-even rate as a tool for guiding when are we actually going to cut interest rates. Once those break-evens get to about 1.6, 1.7, I expect Jerome Powell will actually cut rates. Unfortunately, we're going in the opposite direction. Inflation break-evens are starting to rise right now, which is not fantastic. Again, I've explained why that's happening, but what does this mean for tomorrow? I think there's actually a good chance we're going to get a little bit of hawkishness from Powell to make sure that they continue to talk inflation down. That's a big deal. This economy and this Fed is all about over-communicating so the American consumer knows, okay, the Fed's, even though prices are high and even though the Fed's not going to get prices down, the Fed is going to keep up the inflation fight, and they're going to do whatever they need to do to make sure that inflation comes down. Well, unfortunately, those break-evens reiterate that the Fed has more work to do. And so, as much as I was hoping for somewhat of a dovish Fed tomorrow, which, according to JPM and Goldman Sachs and Barclays and a lot of these various different entities looking into Fed expectations, a lot of the expectations are, hey, let's get the Fed to say something dovish, because then the market will rally, and they'll say something dovish by implying a skip for September. I don't actually think we're going to get that. I think what we're going to get is a Jerome Powell who's very clear that the September meeting is going to be live, which is just a way of him saying, we haven't made any decisions yet. We're going to be data dependent. We're going to look at PCE, personal consumption expenditures inflation data, coming out this Friday. We'll look at the labor report. We'll look at the inflation report. And we are prepared to do 2 or more hikes, including today's. That line, 2 or more hikes, will be bearish for the market. If he says that. Where did he first say that? And why would I think that? Well, in the last FOMC presser, we heard 1 to 2 more hikes, right? We had about 4 board members that were in favor of 1 more hike. You had about 12 to 14 that were in favor of potentially 2 more hikes. That would be the last one. I'm sorry, that would be, well, let me clarify this. We paused the last one, right? And then there was a favor of 1 to 2 more. This is the 1 more, and then 1 more thereafter. So almost everybody was in favor of 1 more. And then you had a bunch of people like, we could do 2 more. Well, so we were thinking, okay, it's going to be either 1 or 2. Well, when Jerome Powell was in Portugal, he said 2 or more, which then skewed the balance to, oh crap, we might get this July one, a September one, and a November one. So in other words, 3 more hikes from the last time he spoke. So that created a little bit of anxiety. And if he reiterates that, there's a good chance we'll actually end up, in my opinion, turning red tomorrow. So that's a thesis that I have. That's what I'm going to be watching for. I'm not super optimistic on the short term here, but I'm very optimistic on the long term. Obviously, I'm going to give you my bottom line strategy here in just a moment, but I have to reiterate, coupon code expires tomorrow, end of FOMC day. Obviously, I'll be streaming it all day long. I hope you join me. Can't wait to see you there. I'll be live on Twitch and so on and so forth. Email us, staff@bkevin.com. Come shadow me. Shadow me as we go look for real estate out in San Diego today, looking at real estate after the market closes. We go check out real estate. Meet us in the office beforehand. If you want all the courses, all the perspective that I have on building your wealth, whether it's going from zero to millionaire real estate investing. Remember, I started working at Jamba Juice. Now I'm traveling to hunt for real estate. That's how I became a millionaire, and I think anybody can become a millionaire by investing in real estate. Check that out. And then, of course, stocks and psychology of money, do yourself property management, all that good stuff. So now, bottom line. What's my take? Bottom line is I'm not worried. I'm very bullish still on the economy. I am short-term a little bearish on potentially what we've got going on with the break-evens, which is going to manipulate Jerome Powell's messaging. So I wanted to give a little bit of a heads-up warning on that. I do not think this will have any longer-term implications for the 10-year Treasury or real estate rates. I don't think they'll still have any longer-term implications really for the stock market either. We'll end up plowing through this. I don't think those AI revenues are coming through as expected. But again, we expected that. Obviously, look at Microsoft Azure's not so great news after their earnings call. Although Google doing well, and they say they're spending on AI, but their CapEx wasn't rising as much as I thought it would. So we'll pay attention a little bit more to Google, and we'll take it from there. Thank you so much for watching. As always, subscribe, share the videos. Appreciate you being here, and can't wait to share the house hack updates with you as well when we're ready to hit public on that. The documents, by the way, are already public. In case you are not aware, you can go to the sec.gov website, search for entities, type in house hack, one word, and you'll find our filing. We are waiting for the SEC to qualify that, and then we'll be able to raise money from non-accredited investors. There are some, limitations around that. You could Google what those are, but they're relatively simple. I think it's something like, actually, I don't even want to speculate on exactly what they are because I'll probably butcher it, but it basically means nearly anybody can invest, which is pretty exciting. So check those out, and stay tuned. Thank you so much. Follow for more, and we'll see you in the next one. Goodbye, everyone.